the second half of 2026, one question matters. How do ordinary people protect their money? Here are 3 principles you should know. First, watch oil. Brent crude has already moved above $110, and some on Wall Street are even talking about $180. Energy disruptions don't disappear overnight, and oil is still the lifeblood of the global economy. If oil stays high, inflation stays high. And if inflation stays high, interest rates won't fall easily. That's why the Fed is holding rates around 3.5% to 3.75%. And in a high-rate environment, cash becomes attractive again. We're already seeing capital rotate out of gold and into US dollar liquidity, a classic short-term defensive move. But this isn't just happening on Wall Street. High oil prices push up transportation, production, and food costs. Gradually, the cost of living rises while the real value of savings declines. At the same time, a stronger US dollar is pulling global capital back into the US, putting pressure on other currencies, which means purchasing power weakens quietly. So what can ordinary investors do? 3 principles. First, if you hold US dollars, don't rush to reposition. In a high interest rate environment, cash itself becomes an asset. Second, keep an eye on energy and resources. Supply constraints don't resolve quickly, and macro trends tend to last longer than expected. Third, gold may be under pressure now, but as long as inflation exists, it remains one of the few long-term hedges against currency risk. Right now, the early signs of a global wealth reshuffle are emerging. So how are you positioning? Holding more cash, watching commodities, or staying invested for the long term? Share your view.